We actually have fallen 1% almost days low. That's a sharp depreciation what we have seen. So global cues which are giving us some signs of worries, and when you look at our markets here, Bank Nifty 300 points down here, but you're not seeing that sort of ferocious selling in Nifty at present. So what's the view there? How the market is actually going to digest this sort of uncertainty in the currencies?
No, in the short run, right, there's a knee-jerk reaction and the market may correct. But if you see, the rupee is on a very strong foot, and this is happening because the currency plight will happen to funds will move to US dollar. That will lead to a strengthening of dollar index, and that in turn will affect some emerging market currencies. So rupee would be in short run the weakness can continue. You can also see 70 touching, in this maybe today or tomorrow.
Is that a sort of a safe opportunity you see for IT or pharma stocks, or you think it's better to stay on sidelines?
No, it's when the rupee depreciates, right? So a short-term trade can always be built on IT and pharma, but that should not be a long-term strategy, because I feel in couple of days rupee would stabilize. The domestic fundamentals will help rupee to weather this this kind of
Jay,
movement.
I don't mean to. I'm just trying to play devil's advocate here. We've had such a strong equity market in the month of July. IP data has come in better than expected. The monsoon has been better than expected. Inflation seems contained. I mean, I can list out the positives which are very pro the Indian economy. But the rupee has had its own trajectory. It's been traded. It might have hit a new low today, but it's been struggling around levels of 69 for the last couple of months.
Correct.
In fact, the fear is that we may stand to see a repeat of 2013 again, which was what we saw in Raghuram Rajan's last couple of months' tenure.
Yeah, if you see, rupee has hit all-time low, right?
I mean, what is going to come to its rescue is what I want to understand.
No, I think RBI would not intervene at this point, because what they want is it to continue with the flow, the fundamentals which are working on the other emerging currency markets. So 70 would be a probability, but as you rightly said, there are our economy is at a more stronger footing than what it was in 2013. So a recovery would be natural, I would believe, and I won't expect RBI to intervene and try to stop it.
But what do you think will help the currency recover? Because FI flows are still not picking up.
I think it's the earnings, the earnings which this last quarter has been pretty stable. And once the earning visibility starts, there will be more funds flowing in, which will help us in sustaining at higher levels.